What a day for the markets. Nifty has officially printed a new all-time high, and the structure behind this move says a lot more than just a breakout. Welcome back to Your Nifty Guy. I hope all of you are doing well. This is the place where we decode the tape with clarity and keep our analysis clean, simple, and actionable. In today's video, we'll break down how Nifty achieved this fresh all-time high, what today's price action reveals about the underlying sentiment, and most importantly, what traders should be prepared for in tomorrow's session. Is this the beginning of a fresh leg up, or is this market quietly setting traps? Let's decode it together. Before we jump in, make sure you like the video, subscribe to the channel, and share it with fellow traders. Let's get started. So, markets today opened with a gap up, right? And first 15 minutes, we saw a new all-time high. Now, congratulations to everyone else, just like me, who treats Nifty like a family and is happy with the new all-time high, even though the portfolios might not be at an all-time high. So, still, it feels like a personal milestone. So, yeah, coming back to the charts, Nifty made a new all-time high at the start of the day, consolidated and was in a sideways range. There were some RSI divergences which were seen, right? Again, today, before we proceed any further clarification from my end, again, it was a no trading day for me. It is becoming a series where, as per my setups, there is I'm not getting good or the good high probabilistic trades as per my setup. But nonetheless, I will stick to my setup and my system. So around here, I'll just tell you what was going on in my head. Around here, so this was the point where I actually thought of shorting Nifty simply because there was RSI divergence, and this was a good structure change, right? If you guys are able to understand, this is exactly in the place where the structure changed from higher high, higher low. So this was the first lower high, and then this low was broken, taken out. So this was the first lower low, right? But then again, out here, you don't get a significant pullback. And then what happens is once you get a good rally on the upside, right? So based on all the fib and all the fib locations as well as the various places from where the buying had actually come in, there are multiple supports on the downside. And that is the reason why at the break of this particular neckline, I decided to stay away from this particular trade, although it was a perfectly fine trade as per my setup as well, right? The stop loss could have been above this particular pullback, or most logical would have been around this place. You would have got some profits immediately if you would have exited around here or here. In this candle, I believe most of the profits would have been gone to be again uh, around these levels they would have gone, but at the close of this candle, it would again have been in some good profit. But then again, the real question is once you are in the live position, once your profit and loss is fluctuating right in front of you, would you have held on to that position, right? So that was the thing. The market was kind of in a sideways range only today, right? If you see, it has also formed a doji on the daily time frame, right? Around here from this particular top, Nifty saw some profit booking, which is obvious as well. And at the break of this low, markets again gave a good move on the downside, which I again refrained from playing into. And again, I did not adjust these levels intraday because it was still quite far away. And markets again, after coming down, again formed a good double bottom, went up. But then again, the buying came in from uh, random location. So that is something that you need to understand and locate, wherein you do not trade randomly. A double bottom formed here as well, right? If you say and just simply trade double bottoms, a double bottom formed here as well. Markets went up and immediately came crashing down, right? So you have to make sure that you place your or plan your entries near important locations. That is the reason why we keep marking our zones. From here, markets went up and closed again near the opening, forming a doji like candle on the daily chart, right? So today's high is 26,310.45. So we are officially going to change our ATH that has been marked on my chart since forever. 26,310.45. So this is the new ATH now officially marked on the charts. On a trade plan for tomorrow, we don't need this, right? Now, there are certain important things that we need to observe, right? Markets have today formed a new all-time high. If we consider this particular swing highs on the similar swing highs on RSI, we constantly have a lower highs, right? This what today is has formed is a open-ended divergence, right? So this is what Nifty has given us higher highs or RSI is giving lower highs. In case tomorrow markets break this high and RSI goes up above this high, it will not be a divergence. So that is the reason why I'm using the word open-ended divergence, and that is something which is very, very important, right? So Nifty currently has an open-ended divergence on 4 hour, sorry, on daily. On 4 hour also, if you compare the two recent highs, right? Nifty again has a open-ended divergence out here. 75 minutes will also tell a similar story, right? This particular swing high to this particular swing high, it is a open-ended divergence, right? Again, we will be adjusting this fib level right now. This goes around here, all right? Oops. Yeah. For tomorrow, again, based on the divergences plus profit booking around the all-time high, tomorrow's trade plan will be very, very simple. Number one, we saw this entire move from the new all-time high till the bottom which was created. I will be using Fibonacci again here. And as we see, we have still only retraced till around the 0.5 to 0.618 zone only, right? And I will be marking this in red. For tomorrow, my plan of action will be very simple. I'll quickly take you on a 5 minutes time frame. Before that, there is this particular trend line which can be drawn. Now, this is nothing but a confluence trading, right? You are simply using a trend line. This is a down move which came in. Try to understand and be with me. Market has retraced to a important fib level. If it breaks down below this swing, right, it will be a breakdown of the trend line as well as a double top at a resistance level, right? So this is a resistance level, and at a resistance level, if we get a breakdown, this is where I will be planning to take a short trade. Now I am marking a direct arrow simply because I do not wait for a pullback in case of a double top, because the neckline break is very important. You're already getting a lot of confirmations. So this will be trade number one. Long trades to be initiated above this, right? It also depends on where do we actually open. Say, for example, we get this particular trade, we come down around these levels. If we see some buying opportunities, we can initiate a buy side trade as well. If we open with a bigger gap down, then that will be a big concern. Not a big concern, but then again we'll lose this particular trade, and then uh, like I said, with bigger gap downs or gap ups, situation becomes difficult. Needless to say, below this also we are absolutely short. Uh, Sentiments, however, for me still remain bullish until unless we get some reversal signals again on higher time frames, which right now we do not have. So this is something which is absolutely normal at a new fresh all-time high. Like we were anticipating this. I already told you about the all-time high magnet strategy where once we are close to all-time high, say for example, 5 to 10% in the range of, and the all-time high will act as a magnet and the prices will try to breach the all-time high at least, right? That is what has happened today, and it's a good day, right? For me, what happens is once there is a series of days wherein I don't get a trade as per my setup, that might be testing my patience, but then I believe that is something which leads to a very good trade in the forthcoming days, right? So yes, I am absolutely looking forward to tomorrow's session, which will lead to some clarity. Like today, we were expecting some sideways price action momentum. Uh, there were moves on the downside plus upside, but then overall, if you see, the price action was kind of stuck in a sideways range only. So yeah, this is the simple trade plan that we will keep in. I for say, for example, we open flattish, we come down below this trend neckline, we take a short position. If we move up, we break out above this zone with a pullback, we can take a long trade. We open with a gap down, maybe with a bigger gap down around these zones. Or even after opening a flattish, we break down this. This is a trade we can take. And then around these levels, if we see some buying, we can absolutely create a long entry. So yes, tomorrow will be a exciting day as well, and we'll keep the trade plan very, very simple, right? So that's it for today's market breakdown. Nifty hitting a new all-time high is a milestone, but what truly matters is how we position ourselves for the moves that come next. Stay disciplined, stay prepared, and let the price action guide you, not emotions. If you found value in this analysis, make sure you like, share, and subscribe to the channel. Drop your thoughts in the comments. What's your view on Nifty after today's breakout? I'll see you in tomorrow's video. Until then, trade smart, trade safe, and remember, consistency beats intensity every single day. Cheers, and thanks for tuning in.